You know what? I doubt you'll get a rate rise from the Fed in December. I think maybe you get 1 or 2 next year is my take. Maybe you get 2. But the thing that I keep thinking that equity markets have a long way to go from where we are today is because if you take the combination of low rates from central banks, reasonably good fiscal policy, and as long as you get some kind of tax cut in the U.S., unless you get, Brexit or high yield markets selling off, or there's something, an X factor that I can't think of, North Korea maybe, I don't see how equities, you might get a correction. I don't see how they go down. I don't see a bear market.
Right. What is this actually, ahead of rate increases? I mean, you've been in this business long enough. I mean, you've been at this sort of a fork in the road, if there is a fork. I'm just kind of creating one for the conversation here. Yeah. But I mean, is this a time when you go all out and go nuts on risk and go, you go up the risk ladder, or do you just accept, what's available on the 5 or 10-year level at the sovereign or quasi-sovereign level and call it, the rest of 2017, and we'll check in again after the Fed moves and see what the reaction is?
Well, if you think of bonds and bond markets, right, you've had a massive rally in all assets. I mean, bonds have had a big rally, credit has a big rally, high yields had a good run. The last couple of days, high yield markets actually given up some of those returns. Yields have started to rise a little bit, but the 10-year Treasury's been hovering around 2.4% plus or minus 20, 30 basis points, even though the Fed's moved a few times. That's saying that the longer dated bonds do not believe, A, that there's any inflation, or B, that the Fed is going to be a lot more aggressive than what the market's pricing in. So in an environment where interest rates are benign, and in an environment where the central bank is actually guiding those rise in rates very slowly, risk assets have to do well, right? As long as corporate earnings are reasonably good, unemployment's at historical lows, you might get some tax cuts. Yeah. I don't see how that derails risk assets and equity markets. Right.